Longer version of the stats review for the month of September of 2025 of the Toronto real estate market. Toronto GTA market is waking up. It's not heating up. If you're planning a move this fall, align your strategy with the new math because the rates are lower and but the leverage is higher and the timing is pretty much crucial. Get in touch with people who are transacting real estate on day-to-day basis. Leases, finances, statement of opinions, commercial real estate, purchasing of land, development, all sort of stuff. You get the perspective of how you navigate in this market. Let's make your next decision a smart one. The GTA's market is not for the faint of heart and it's a long-term approach of investing. However, if you make a mistake at the wrong point in the market, it's hard to recover. We are having hard-earned money invested in the market that might be too much risky for some people. Across the GTA, number of transactions being recorded in the month of September was close to 5,600 homes sold. That's a combination of condos and freehold. Now, that's 8.5% more than last year. In terms of prices, the prices of stock have slid by almost 5%, and that is close to million 60. In September 2020, 2024, we were in a higher priced market than what we are in right now. At the same time, we do have 19% more number of listings on the market. Buyers have a lot of choice, 5.1 months of inventory. This is what we are calculating that we have. Just above the balance threshold that you call it the seller market or a buyer market. Buyers having a lot of choices, but we are seeing a life return in this market. That means that activities are picking up. Listings are sitting less and less on the market, especially in the more affordable sector or the mid-range segments. Now, let's bring in some perspective from the in-house mortgage brokers that we have with years of experience with all major chartered banks. A quarter of a point rate cut, that means in September, that's been activated in September, that means that people who are in sidelines are now effectively qualified for more, and people who have just given up, they may rethink their strategy of giving up and come back to the market. That takes 60 to 90 days. We are going to see by the end of the year, maybe in the beginning of next year, the surge in the activity. That might be a blip, but it's going to be combined with the rate cut that's been coming in the end of October. At the same time, it's going to be having another rate cut by the end of the year, which there is a possibility of having it or not. But regardless of that, that's going to fuel these thoughts of coming back on the market and transacting real estate. But these are all psychological perspective of who the buyers are today. They are serious buyers. They are negotiating hard. Sometimes, though, it is that they are still like sellers in the back of their minds. They have that peak of the market, and they are seeing that it's a good value to purchase right now. That's why I encourage you stop the video, contact me, and just recheck your facts and realities. With the qualifying rates easing, the average household gains is around 25 to 30,000 on the borrowing power. And here is the catch. Lenders are staying conservative. Appraisals are done properly, but below what you're expecting. Affordability is marginally better, but not miraculously fixed. This is the confidence that we have in the market. It's not exuberance. People are coming and trading real estate. That shows that they still believe owning a real estate is a long-term approach and a good approach in their life, good decision that they can make. Now let's zoom in into different regions in GTA. In Toronto, generally, condos led the action. Central condos market has picked up significantly in the price ranges of below 600 and even close to $500,000, with the sales up of 6% of a year-over-year basis. But the average condo price is $709,000, which is down slightly from last year, close to 2%. But it is showing that the downtown's demand is stabilizing. In comparison to that, in contrast, going way north, in York region, the detached home of the region is averaging around 1.5 million, 1.47. That is seeing a double-digit number of transaction. Attention that goes there is significant. It's mostly driven by families that are upgrading while rates are softening. It shows that internally we have moved from smaller places to higher places. People who sold the 500,000 or somewhere in between is now moving to the higher prices. In Peel and Durham region, this slowest to recover. These two regions, throughout all my videos, I've begged you to pay attention when you're purchasing in those areas. With the higher supply nowadays and longer days on the market, the only thing that's um, coming to my mind based on my practices is that the prices are still under a lot of pressure and they are softening and they have to go down. But they're attracting first-time buyers still because of the price ranges, meaning that the activities are higher than the rest of the neighborhoods and sectors of the market in GTA, but still the prices should come down. So the picture is uneven, but it is the healthiest uneven we have seen in a year. That is shown in number of activities that we have increased since last year. Let's talk in the macro market and see, because the economy is setting the stage for the real estate, what's been happening in September. In September, the CPI came at 2.1% and finally cooling down from Bank of Canada's 2% range. That is GDP that is in Q3 was the economy has contracted, and that is close to 0.5%, that is tracking around that range, but that is in a positive after softening, after the very soft spring that we have. And yes, we are still absorbing those job losses, and we are still adding to those job losses and unemployments by the beer store closing so many other locations, and full-time job posting ticked in September. What it means is that Canada's economy isn't booming still, but it is stabilizing. And housing, as usual, is the first to feel the shift. When money gets cheaper, the housing is the first thing that's moving. Here is the twist. I want to watch for you and for all of my clients. Historically, after the first rate cut, home sales surge within the 60 to 90 days. That's why in the beginning of the video I said this video is for you. If you want to transact in fall or the beginning of winter of next year, the clock has started ticking in mid-September when the rate cut has been coined. And so the October and November could show a minimal rebound, but not explosive, but visible. However, if the rates stay flat and inflation ticks up again, the momentum could frizzle by winter. That is why this fall's data will tell us if it is a recovery or it has legs, or if it is just a relief or a rally. All right, the strategy mode is over. For buyers, you negotiate to the strength that you can use the data to your benefit. There is plenty of inventory that you can look for and shop in those inventory, and sellers are open to creative deals, especially those who listed in August. Watch for 500 to $700,000 condos price range and million to million two detached brackets. Those are where the best ratios live. But for sellers this time, serious buyers are active again. As you watched throughout my video, but presentation is the key. Pricing make or break a sale. You stay on the market forever if you're not on point with your pricing. Do not chase last year's stats, because I showed you in the beginning of the video, prices are sliding at a pace more or less close to 4 or 5%. Meet the market where it is right now and you move quickly. But for investors, yields are improving. Look at the rents right now. Majority of rents that we have right now in the condo sector is covering the prices that we have. Even in the detached sector, in all the freehold sectors. Historically, when you're looking at the neighborhoods, you don't see that happening as it is happening right now. In the freehold sectors, the rent of the whole building is covering almost 80% of the mortgage amount. That is something that we have been missing for the past close to 7 to 8 years, because we have been pushing the market higher and higher in the prices in a way that it's been unaffordable, and everybody's was thinking about the speculation value of the real estate rather than the investment value. Now, whether you are investing in multi-family properties, or a single family, that's becoming a major factor in your decision making, and that's becoming more visible. And you're having more choices in today's market. If BOC trims another quarter of a percent or 25 basis points by the end of the October, your refinance math changes overnight. So to sum up, the GTA market is waking up and it's not overheating. We are moving from a fear to function. And as rates ease, confidence will follow. We have seen that from a number of activities that we have. If you want a personal market brief or want to model how this new rate environment changes your affordability, DM me, message me in this video. And I'll comment in this video, I'll comment below the video with the full description of who I am and what's my interpretation of your situation, so everybody can understand maybe their situation relates to yours as well. In your September market snapshot, I covered the activities, I covered the prices, I covered different macro markets. Whether the interest rates drop or not, we are going to see more or less activities picking up. Whether it's going to happen by the end of the year, towards the end of the year, it's going to be delayed if the prices stay flat, if the interest rates stay flat and not moving anywhere into the next year. You're going to have choices, you're going to have a lot of options if you're sellers, if you're following data of today. My name is Behruz with Toronto Real Estate Board broker with close to 15 years of experience. Thank you very much for watching the video. Please stay tuned for my other videos and get in touch. If I can help, I'll definitely help. 647-382